JB Cycles with update on December the 22nd. So this is my normal S&P update, the weekly update, and it's actually my third video this weekend after making one on the Norwegian markets and on longer term cycles and in general on my cycles work. But now looking at the US markets shorter term. So here's my 4-week cycle in black. This is the new cycle that started around August, and in dotted green we see the old cycle. So I've drawn two scenarios here in green and red. Both are suggesting an ABC move. However, I don't know how bearish this last C will be in January. But at the moment it looks like we have completed the A down and we are in the bounce B going into around New Year. I should say there is still room, some bearishness here in the cycle on Monday, Tuesday, so it is possible we drop down a little bit first, but in general I'm looking for a bounce B and then a last move C down in January. So let's zoom out a little bit. Here's the 3.5 year cycle in red, and we have entered the yellow topping phase, and I have drawn I think this is my primary scenario with a topping formation going from here and into February, March, and then we should start a downtrend. But you know, this outlook could change. We have to see how bearish will the market become now and into, say, middle of January. But I'm not expecting the market to collapse, so we should see some kind of a topping formation. We have this other cycle. This is the 17-week cycle, so we have still not broken this trend line, but we could do so in first half of January. But I think more and more here is suggesting this is not the bull market high. We should look for a top around February, March. It could be just some kind of a double top. We have to see. But I don't think this is already the bull market top. And going to the S&P daily data wavelets. This is kind of messy. So this black one is still in play. You know, it could become a little bit more dramatic like this red one. It's possible. And I have my primitive tool here, my box of 26 trading days, placing it here at the wavelet top, suggesting we have about 2 weeks more time before we should look for a low. Don't trust any low before we have finished these 2 weeks. And you know, if this breaks down bearish, it could even be later, because this rectangle is for bull market rules. However, if this now turns into something more bearish, then the bear market rules allow for an even later low. So we have to see, but I'm not expecting anything very bearish here in January. But again, this is in my opinion confirming my assumption. We have finished the A down. We are now in the bounce B, or very soon the bounce B should begin, and then early January we should see the C move to the downside. So let's switch over to VIX. So this is the VIX wavelet. It's around a 10 to 12 week wavelet, and the wavelet is approaching a top, and when inverting it for the S&P we see it's approaching a low. And I have two scenarios generated from this VIX wavelet. One is generated from this point and the other is generated from this point, and the two projections are very similar. Here in red we see there's still about 10 trading days where we should expect, or there's a high risk for more downside, or at least we should expect some kind of a sideways move, making a bottom formation. So again, I'm seeing a down, a B top in this coming week, and then down the C, ABC, and this other projection very similar, A, bounce B, and the final down C. Yeah. So I guess that only leaves us the hourly data for Dow Jones Industrial, and this is kind of messy. I have to clear up a little bit here. So last week I drew this red scenario, but that did not play out. And also I don't think this was a 2-week oscillation low. Something else is going on. The 2-week oscillation is messed up. Actually, I'm quite surprised that it has stayed kind of stable here, because I expected the 2-week oscillation to get messed up by Thanksgiving. So I said around Thanksgiving we should not trust anything here the next couple of weeks before we see if the 2-week oscillation has changed or not. Anyway, I wouldn't dare to guess where the 2-week oscillation low is, but you know, that would be an obvious guess, I suppose. And the wavelet configuration here looks bullish, and we are very oversold, you know, longer term, extremely oversold. Yeah, we have to see a bounce. We will break this falling trend line and have a bounce, but then we should expect another move to the downside. So something like this. Well, it's rather similar to this yellow one actually, but we don't know, or I don't know, if this will be a kind of a double low, or you know, much more to the downside, capitulations of some kind. But that would be my general scenario. This coming week we are making this bounce B, and then the week of New Year and into January we should continue to the downside. So, you know, longer term, the Dow Jones Industrial has been in this rising trend channel and started to break out. It's kind of a blow off top, and now we are breaking down inside this channel again, and I'm expecting, well, we are getting close to this bull market high, but as I said earlier, I would expect some sideways topping formation into February, March here, but first we have to see how far down will we get here in January. So yeah, that's my general scenario. You know, this could potentially get down lower. You know, this is the Trump election rally gapping up, so yeah, we could go. Well, actually we have closed the gap here, it seems, almost, but yeah. And going back to where we began, yeah, we are, at least the Dow Jones shows us it is extremely oversold. We should expect a bounce B, but then we should at least make a double low, and with a very high risk of making a lower low in January. But then I think that could be a buying opportunity, and with a rally into February, March. But at this late stage of a bull market, you should be very careful. It's not a time to go all in here. Stick to very short-term trading and careful with your positions, and you know, use some stop loss, and don't trust this market any longer. So, see ya.